In fact, I did get a chance to speak to Shenu Agarwal, MD and CEO at the company. Let's quickly listen to that conversation.
I think there are two aspects to our switch business. One is the UK and one is India. In UK, we had been committed to that market for over 15 years now, but somehow we were not able to make the business viable. We were making pretty significant losses in the last few years, and we have tried various options available to us to see if we can really make that whole operations look good. However, we have now decided to start a consultation process with the employees, which might potentially lead to the cessation of the manufacturing activities. At the same time, we are not trying to exit the market. We have a very large vehicle park there, and we want to support our customer base. We also want to find alternative manufacturing sites, for the electric buses to serve the UK and the European market. So yes, but whatever losses we were making, which were ranging between 2 to 3 million British pounds every month, that should come down drastically. The only thing that would remain in Switch UK operations would be this aftermarket business, which would be small in nature, but it would be profitable. So we can expect that, in terms of consolidation, we would have a positive effect of this decision. On the other side, Switch India is actually doing very, very well, and the market is itself looking very bright, and Switch is rightly positioned, we believe, to take care of that opportunity. Now, Switch India is already expected to be EBITDA positive in FY25, but FY26 is actually looking more promising. We are hoping that we will be able to treble our bus volumes in FY26. We would be able to more than double our LCV volumes in FY26. And overall, on the top line level for the company also, we think we would be able to double that or even do better than that. Now, as I said, it is already EBITDA positive. Our next milestone is to make the company PAT positive, which should happen, we think, in the next 4 to 6 quarters.
Right. So that's an interesting point that you made in terms of the India business. A follow-up question to this, Shenu, is when you're looking at alternative manufacturing sites for e-buses to cater to this market segment, what are the locations that you're scouting right now? And by when would you look at it? I mean, what will be the timeline, and anything in mind in terms of the capex that will be required?
Oh, listen, we have several manufacturing locations in India and even outside India. So we are looking at each one of them. I think we'll make the final call within the next 90 days as to which location would be more suitable to supply to UK and European markets. It could be any location in India, or it could even be location outside India. Yeah, so we'll come back to you on that. And all these locations are, I would say, most of these are already capable of producing the products that we want to send to UK and Europe, and therefore the capex requirement would not be significant at all.
So basically what you're saying is you will just look at expanding capacity at an existing unit versus scouting for a new unit, right?
That is right. We are not looking at a new unit at all. We would use the available capacity in the current units to supply to UK and Europe.
Okay. And any indication that you could give us in terms of which are the viable units where your utilization levels are still low and have the capability to look at e-buses?
So as you would know, we have been expanding our bus capacity in India very strongly. We have just inaugurated a plant in Andhra Pradesh, and we are going to inaugurate one more plant in Lucknow very soon. So there is available capacity in India, and we have available capacity even in UAE right now, where we are making lots of buses for the GCC markets. So there are several options available. As I said, within the next 90 days or so, we'll make that call.
Okay. Moving from there on, when you spoke about Switch India as well, in fact, in the conference call, you did mention that the focus on contracts with outright sale is what you're looking at, and you will not enter into the GCC contracts. Now, all the GCC contracts will be delivered through OHM Mobility. which is likely to need funding support at a later stage. So what is that time period that you're talking about? What's the amount of funding that will be needed, and how are you looking to fund this process?
That is right. That Switch India, as far as Switch India is concerned, it will be totally focused on outright sales, whether it is buses or LCVs. And the reason that we created Om Mobility was to make us a company that specializes in the EMAS, right? So Switch India is a manufacturing, a design technology company, and Om will be an EMAS company. Switch India, because it is doing really well, it is already EBITDA break even, and we hope that it will be PAT break even as well in next 4 to 6 quarters. The funding requirements of Switch India will not be very significant, because it will have the capability to stand on its own feet. However, just because of the nature of the business, they may need some external funding. We are working on it. There is no hurry because it is well capitalized, I would say, for at least a couple of years now. But within that time frame, we will look for an external investor.
Okay. And with regards to Switch UK as well, I think you do have a net debt which is around 80 million pounds over there, which is due for repayment in FY29. Now, the fund infusion that was approved in Feb 2025 is going to be utilized to some extent to repay some part of the debt and partly for closure related expenses, which I'm assuming are estimated at around 5 to 10 million pounds. Is this going to be enough with regards to the equity infusion and the closure related expenses that will be, will they be enough to cover up for the debt?
So you are right. The one-time closure-related cost would not be very significant. We are expecting that it would be in the range of 5 to 10 million pounds. However, once we complete the consultation process, we'll have a more accurate number there. And the rest of the money that the board had approved to be inducted into Optare, which is a holding company of Switch UK, will go to pay the debt. Now, the overall debt is 80 million British pounds in Switch UK. But the good thing is that we have an agreement with the lender that it can be paid back by year 2029, right? So we have a long runway to pay that debt. And as we go along, depending on the availability of cash in Ashok Leyland, we would bear that debt over a period of time. But yes, right now, whatever equity infusion we had done in February, a small part of that would go towards one-time closure, and the rest will go towards paying of the debt.
Okay. The other aspect, Shenu, to be asking you candidly is, the street is looking at the entire restructuring as a major positive, right? But the other overhang that the street is now worried about is the increase in promoter pledge. What would you have to say on this? Because we've already seen a 15% promoter pledge that is existing. Over and above that, we are seeing another 10.2% that has come in. So it's almost, say, 25% in terms of the total equity. Why an additional pledge right now?
I think you are asking the wrong person, but I think the way I would respond is, that the promoter family, Hinduja family, has a lot of business interest outside Ashok Leyland as well. And some of these businesses are doing very, very well. Secondly, I would say that, really I am not privy to this matter as far as the usage of the funds are concerned, but I would be more than happy to get back to you if we have more information. Okay. But the one thing that I want to reassure everyone based on our discussions with promoters on the strategy of the company going forward is that they are fully committed to Ashok Leyland. They really want to grow this company. They really want to realize the vision of the company to take it to the top 10 global CV players. And they are actively involved in all the strategic discussions along with the board of directors to move the company in future even more strongly. So I think from that point of view, I would say that we should have no concerns at all.
I appreciate, you being candid on that, and, that you're not privy to that kind of information, but anything that you could tell us in terms of the average price at what the shares are pledged?
Oh, I wouldn't have that information.
Okay. Yeah. Apart from that, there was also an indication that further equity fundraising option would be pursued only when valuations are favorable. What is your view on that in terms of the current valuation versus what's that expected bump up that the company or the management is looking at in case you will look at a further fundraising option?
Listen, as I said, as part of this restructuring, we are hoping that the cash needs of Switch UK would go down considerably in future. Switch India, like I said, is really doing well, and we are hoping that it will achieve PAT break even and in the next 4 to 6 quarters. And therefore, I would say that the cash requirements of Switch UK also would not be very significant in future. So the point I am making here is that there is no hurry for us to raise funds for Switch businesses. That is number one. Number two, like I had previously said, the valuations of the EV businesses in India and around the world are not at the previous levels, right? So I think this whole issue is more about timing now, not about the need, and we would at the right time explore the options of fundraise. We always have two options, two paths available to that. One is that we can go for a private or public placement, or other is we can straight away go for the IPO. But I would say it is still 2 to 3 years away from now.
Right. Last two questions from me, Shenu. One is in terms of, I'm not sure this is with regards to Hinduja Leyland Finance, whether I should be asking you or not, but the NOC from the RBI for the reverse merger is expected very soon, right? So post this, the process of valuation of both the companies would be initiated, the swap ratio would be determined. So any timelines that you could give us for this one?
Yeah, as the listing process is a little bit cumbersome, especially for NBFCs. But yes, that is right. We are hoping to receive the NOC from RBI very soon. We are in constant touch with them, and once that is received, the rest of the process would follow. I wouldn't guess a particular timeline given all the processes that needs to be fulfilled. But still, I would say that, it should happen in the next 2 to 3 quarters.